If you're considering investing in real estate but don't have the cash on hand to make the purchase, a real estate investment loan can be a great option. In this video, I'll share the key investor tips you should be aware of as you start the process to secure a real estate investment loan. I have invited a special guest and expert in real estate investment loans to discuss the items all investors should be aware of as they consider working with a lender. The discussion will help guide you through the steps to successfully apply for a real estate investment loan so you can start building your real estate portfolio. Hey folks, my name is Omran Sheikh with eXp Realty, your trusted partner for all things real estate. If you're new to the channel, welcome, and if you're returning, it's great to see you again. If you haven't already done so, please subscribe, and if you find value in this video, don't forget to smash that like button. Before you start applying for a loan, it's important to have a clear idea of your investment goals. Are you looking to flip properties for a quick profit, or are you more interested in long-term rental income? Once you have a clear idea of your investment strategy, you can start looking for the right loan product to match your needs. When it comes to applying for any loan, your credit score is one of the most important factors. A good credit score can help you secure a lower interest rate and better loan terms. Before applying for a real estate investment loan, make sure to check your credit score and take steps to improve it if necessary. When applying for a real estate investment loan, you'll need to provide a range of financial documents, including tax returns, bank statements, and proof of income. Gathering these documents ahead of time can help streamline the application process and increase your chances of approval. Not all lenders are created equal, so it's important to shop around and find the right lender for your needs. Look for a lender that specializes in real estate investment loans and has a good reputation in the industry. Compare interest rates, loan terms, and fees to find the best loan product for your investment goals. Once you found the right lender and gathered all your financial documents, it's time to submit your application. Remember to do your research, gather your financial documents, and find the right lender for your needs. With the right loan product and a solid investment strategy, you can start building your real estate investment portfolio and achieving your financial goals. So without further ado, let's get into the discussion.
Hi, Omran. Thank you so much for inviting me. My name is Ana Silo. I'm a mortgage broker with Dominion Lending Center. So what's the difference between mortgage broker and the mortgage person at the bank? I have in my portfolio multiple lenders, right? We have almost 90 different lending institutions available for our clients, starting from big banks like Scotia, TD, HSBC, going through credit unions, Meridian, Duca Credit Union, B lenders who are dedicated for clients who do not qualify in traditional channel, right? So there is a multiple options available.
One of the biggest questions I get asked, obviously, and everybody has their own perspective, is this a good time for investors to enter the market?
If we will look at what happened within the last 2 years, the prices were incredibly high, right? The rates were lower, but the prices were incredibly high. What happened now, prices are nice and low, which means that we will save a lot buying right now. We will save a lot of money on the purchase price. Yes, the interest rate is higher, no doubt. I will not argue with that. However, the rent amount you will be getting for the property, your investment property, will be much higher than it was 2 or 3 years ago. Simple example, 3-bedroom townhouse. 2 years ago, you could rent for $1,600, right? Right now, the rent is probably around $2,500. So again, yes, you will pay more money for your mortgage, but you will pay way less for the property. On top of that, you have to think about another thing when you are an investor. As an investor, we'll be deducting your interest portion from the income from your rental. So let's say you're making $20,000 on your rental, that's your income, and then your interest portion is $10,000. So automatically your accountant will decrease your income, excuse me,
Right.
Which is another great thing, right? So your taxes are going to be way lower than they used to be. And again, those higher rates that are kind of scary for some investors, they will not stick with us forever. So the goal is save money on the purchase price, get the best possible mortgage you can, and then you will have a huge profit, because again, a lot of saving on the purchase price and the beautiful rent, which is your passive income going straight into your pocket every month.
Absolutely, right. And I mean, if anybody is getting into real estate for the sake of creating wealth, there really are very few options, if any other options, that are comparable to purchasing real estate. And you bring up a very good point, right? It's one thing to be cautious and sort of watch the market and wait it out a little bit, but it's another thing if you're actually trying to time the market in any way, right? And that's one of the things that I always advise my clients to shy away from, is not to try to time the market to try to get maximum economic benefit, but to look at your investment strategies and to look at your economic situation, personal economic, professional economic situation, and align your investment strategies to that, and have a 3 to 5 year horizon in order for you to maximize your benefit out of that investment.
Real estate market, real estate investing it's not a short-term thing.
How important is the credit score? What should I be thinking about from a credit history perspective? Can you offer some comments on that?
Absolutely. So there's a few major factors that define you as a potential investor in real estate, as a potential mortgage applicant. Like you mentioned, credit score. The better credit score, the better mortgage I will be able to offer. As I mentioned at the very beginning of our conversation, we have mortgage for everyone, right? But if you want to have a better rate, if you don't want to go into, we call it B lending, where fees apply, then credit score is significant. It's major thing that the bank will consider qualifying you for the mortgage. So I always try to prepare my clients, my potential investors. Make sure you have a credit score. Make sure you have money for the down payment, right? We usually want to see 20% when it comes to rentals. When you're buying a duplex and you will be occupying one unit, the other unit will be rented, then you need just 5% to proceed with this type of mortgage. But in general, when it comes to rentals, we want to see money saved for the down payment. The money can come from your own savings. The money can come from the gift, from the family gift, but you have to have some sort of security in your own money going into this business. And the income in general, right? You have to generate income in order to service the new liability, because in the end of the day, the bank will look at this mortgage as a liability, right? So you need to show some sort of income. You can be self-employed, you can be full-time, but you need to show the income, right? Stability in income is very important.
Absolutely. Is there a sort of a base floor from a credit score perspective that you look for in order to say, okay, you're definitely qualified for A versus B, or do you have to sort of take the entire situation in play, which obviously you would, but are there any sort of rules that you follow?
That's a great question. So most of the big banks will look at your application when your credit score is over 600, 650. Right? However, if your credit score is 650, but you still have in your report multiple missed payments, right? Then they will say no. Like recently, I had this client, his credit score was 678, but he is a little sloppy with his payments, and he really likes fast money. So from time to time, he goes to these cash money places, money mart places, The credit score, like I said, was not bad, right? It was way over 600. Yet the bank said, no,
Mm-hmm.
no.
Mm-hmm.
So the number is very important. We want to see if they want to be qualified on the A side. We want to see
But
650,
obviously,
right?
yeah, but obviously it's the overall package. I mean,
Yeah.
so it's very important if you are looking for, you know, if you're approaching a lender, it's important that you're bringing in a complete picture of what your assets look like, what your liabilities look like, and you know, even if you're not holding income generating assets, but showing your assets is still
Yes.
critical.
Oh, yes, 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 absolutely. Like, especially that's very important for the big banks who, you know, when we are in the spot where we have a hard time qualifying, and then we will show, hey, we will say, hey, this client, yes, we are in our limits, but my client is a high net worth person. He has savings, he has RSPs, he has other properties that he's managing right now. Then the bank will change their approach and they will provide us with approval. So
Right.
it's very important to do this homework before you step into the real estate business. Prepare yourself, make sure your credit is good, make sure you're showing your income, make sure you have your down payment, right? So
One of the things that I always advise folks that are either close to purchasing or going through that process is, you know, not to go out and make other purchase decisions that are going to increase your liability. So, you know, don't go out and lease a car or, you know, buy a whole bunch
yes,
of furniture because, you know,
yes,
you're excited about taking possession, and then you go and, you know, max out your credit card on all of the beautiful furniture that you want.
no,
Is to hold off on any of that until after
100%.
you've taken possession, right?
100%. You know, when I do pre-approval and then when I release the pre-approval certificate to my client, I always tell my clients no Tuppermans, no new vehicles, no new furniture, no expensive trips until the moment when you hold your keys to the new place in your hand. And then the world is yours, right?
Yeah, absolutely. So speaking of properties, then let's say you and you know, of course, investors will come to me and say, "Hey, look, I really loved this property that you showed me," or you know, there's a whole, maybe let's say we've shortlisted two or three. Um, what level of detail then do you need about the property in question in order to complete your application from the investor's perspective?
I take under consideration property tax. We need to know how much clients are going to be paying for this. Condo fees, if applies, right? And then we need to see the zoning. Zoning is another very important thing, right? Because some properties they have dual zoning, residential, commercial. Then the mortgage
Right.
is very different. Different rules apply. And then we want to calculate potential cash flow, right? So then I really like to speak with the real estate agent directly and I ask them, hey, is this property currently leased? What is the rental income? What is the potential rental income? Because doing my application, I need to know how much rent my client approximately will be collecting, because we are using an offset coming from the property income added to the client's income to debt service the mortgage. So let's say simple math, client is collecting $1,000 for the rent, just to make it simple. Some banks, they allow us to use 80% out of this amount. Some of them, they tell us 50%. That way we do the math on our side to make sure that the client can afford the monthly payment related with the property, with the mortgage. So
The
I'm
ratios are
a
working.
number girl. I'm not a picture girl. I'm a number girl.
That's fantastic, because of course that's, you know, we want to have an objective look at the situation, and especially, you know, if I can ask you to think about those types of investor clients that are well versed, they're experienced, and they sort of are holding a portfolio of investment assets. If you could maybe comment on the type of insights and support that you can provide in helping them optimize their investment strategies?
Right. So I'm an investor. I'm a landlord myself. I love real estate. So I can tell you guys from my own experience, my own perspective, that there are a few very important factors that will determine your success in this business. First of all, my goal with all my properties was to make sure that I break even or have at least $250 positive cash flow. So when you buy a property, check with your real estate agent what is the potential rent amount, right? So that's number one, very important. Another thing is tenants. Tenants are everything, right? So you don't want to rent your property to a random person. And now when the rent is on such a high demand, you have the privilege of being selective, and you have to be picky, because in the end of the day, you're giving these people your house. They will be looking after your property, so you want to, and they have to pay you, right? They have to make payments. So do the homework, and in this case, I strongly advise to hire professional. Hire your real estate agent.
And one of the things that I would like to caution investors specifically on the screening phase of this process, right, is to not let your emotions get in the way. And
Yeah.
we see this all the time, where if a property's been sitting for 30 days, 45 days, it's very important for you as an investor to be able to not let your emotions get in the way, trust the process. If you've got the right professional on your side, and if
Trust
you've
the
done
person.
all of the right components in there, trust the process, the right tenant will come.
Going with the right tenant is crucial. Trusting your people is very important. Going with professionals is, well, real estate, investing in real estate, buying a house is one of the most important decisions in your life. Those are big money, right? So why would you want to save $1 here and there and then lose much more on fixing this mistake
In the long run, right?
So like you said, surround yourself with a team of people who will be helping you. Get yourself an experienced, smart real estate agent who's looking after you, who cares, right? Get yourself a mortgage broker who will shop around for you, who will choose the best product that suits your needs the most.
There's a level of trust that's required, and it's really important that you do, just like you would screen your tenants, it's important that you screen the professionals that you're partnering with as well.
Absolutely.
And on that note, Anna, thank you so much for the time that you've given us today. I hope the viewers have had some interesting insights and takeaways that they can use as they think about investing this year. And I welcome any comments, any questions you have. Please drop them in the comments below. And thanks again, Anna. And your contact information, Anna's contact information, will also be in the description below. And if you have any questions, or if you want to reach out, please do so and take a look. And don't forget to like and subscribe. Thanks again for watching, and we'll see you in the next video.
Thank you so much, Omran.